Welcome to the deep dive. We got some information sent over from a listener about Blue Barn funding and specifically unsecured funding for small businesses.
Right.
And we thought, yeah, this is definitely something worth digging into.
Absolutely. It's a hot topic for many small businesses.
So our mission today isn't just, defining unsecured funding. We want to really explore the practical upsides and maybe more importantly, the things you really need to watch out for based on what Blue Barn funding is putting out there.
Exactly. And they list a few specific types, which is helpful. Things like 5 to 7 year term loans. They mentioned needing a FICO score around 680 plus for those.
Okay.
And then there are business lines of credit and also personal credit lines. For those, they're generally looking for a FICO of 700 or higher.
Got it. 700 plus for the lines of credit.
Yeah. And importantly, they also mention offering a soft pull pre-qualification.
Oh, that's good. So you can check things out without it impacting your credit score right away.
Precisely. It lowers the barrier to just exploring options.
Yeah.
But the core idea, like you said, is that it's unsecured. No collateral needed.
Right. That's the headline grabber, isn't it? No collateral required. It almost sounds, well, a bit risky maybe, or just really appealing if you're starting out.
It can sound like both, depending on your perspective.
So let's dive into that first. What does no collateral actually mean for a small business owner on a practical level?
Well, fundamentally, it just opens doors. Blue Barn funding makes a point that these loans aren't tied to your equipment, your building, or, your personal house.
Okay.
Think about a tech startup, maybe, or a consultant. Lots of ideas, lots of potential, but not necessarily a ton of physical stuff to put up as collateral.
Right. So for those asset-light businesses, this could be a major pathway to getting funded where maybe traditional routes were closed off.
Exactly. It kind of levels the playing field.
Yeah.
And there's another angle, too, the personal risk factor.
Yeah. Good point.
You're not potentially putting your family home on the line if the business hits a rough patch. That's a huge weight off an entrepreneur's shoulders.
Definitely. Less sleepless nights worrying about losing personal assets. So accessibility and reduced personal risk are big takeaways there.
Big ones.
Yeah.
Especially for startups and those service-based businesses we mentioned.
Okay, moving on then. Another thing that jumped out was faster access to capital. We all know speed can be crucial in business. How does being unsecured make things quicker?
Well, it's directly linked to that lack of collateral, actually.
How so?
Think about a typical secured loan. You've got to get assets appraised, right? There's legal paperwork to put liens on things.
Yeah.
It all takes time. A lot of time, sometimes.
Lots of hoops to jump through.
Exactly. With unsecured funding, you basically slice away that entire layer of complexity. No appraisals, less documentation focused on securing specific assets.
So it just streamlines the whole process.
Massively. Blue Barn funding even talks about potential funding in days, maybe even hours in some cases.
Wow, hours. That's fast.
It can be. Imagine you run an e-commerce store and suddenly get a huge, unexpected order. Or a chance to buy inventory cheap, but only if you act now.
Right. Waiting weeks for a traditional loan means you miss the boat entirely.
Precisely. That speed isn't just convenient. It can be the difference between seizing a major opportunity and watching it pass by, or covering an emergency payroll.
A literal business saver in some situations. I can see that. That agility is key.
Absolutely.
Okay, so less risk, faster money. What about how you can use the money? Blue Barn funding mentions flexible use of funds. What does that look like in practice?
This is another really attractive feature. Unlike, say, an equipment loan, which is specifically for buying that piece of equipment.
Right, very specific purpose.
Unsecured funding usually gives you much more freedom. The lender isn't typically restricting how you spend it, within reason, of course.
So you could use it for a payroll one month, maybe a marketing push the next, or stock up on inventory.
Exactly. Blue Barn funding lists examples like that: payroll, marketing, inventory, working capital, unexpected expenses. It lets the business owner decide what the most pressing need is at that moment.
That seems incredibly valuable. Business needs change so fast.
They really do. Having that flexibility allowed you to pivot, to react to market changes or internal needs without going back for a different type of loan for every single thing.
Yeah, much more responsive. Okay, now something maybe less obvious up front, building business credit. How does unsecured funding fit into that picture?
This is a really important long-term strategic benefit. When you take out an unsecured loan or line of credit, and crucially, you make your payments on time.
The key part, right? On-time payments.
Absolutely key. That responsible repayment history gets reported to the business credit bureaus. It demonstrates you're a reliable borrower.
So it's like building up a financial reputation for the business itself, separate from your personal credit.
Precisely. And a strong business credit profile is, well, it's gold dust for the future.
How so? What does it unlock?
Blue Barn Funding points this out. A good business credit score can mean qualifying for more funding later on, potentially larger amounts when you're ready to scale up.
Okay.
It can also mean better terms. Think lower interest rates, which saves you real money. Or maybe longer repayment periods, which helps with cash flow.
So using unsecured funding smartly now can actually make future borrowing easier and cheaper. It's an investment in future financing.
You got it. It builds credibility with lenders down the road. It's a strategic play.
Got it. Okay, let's talk options. Funding isn't one size fits all. Blue Bond Funding mentions a variety of options under the unsecured umbrella. Can you break those down a bit?
Sure. Yeah, unsecured funding covers a few different products. They mention things like business credit cards. Most people are familiar with how those work. Revolving credit, pay it down, use it again.
Right, like a personal credit card, but for the business?
Pretty much. Then there are business lines of credit. Similar idea, you get approved for a certain limit. You draw funds as you need them, usually only paying interest on what you've drawn. Also revolving.
Okay, flexible access to funds up to a limit.
Yes. Then they mention merchant cash advances, which
Yeah.
are a bit different. That's often an advance based on your future sales, typically credit card sales, repaid with a percentage of those sales.
Ah, so repayment is tied directly to revenue.
Often, yes. And finally, short-term business loans. These are more like traditional loans, but, well, shorter term and unsecured. You get a lump sum up front and repay it in fixed installments over a set period.
Fixed payments like a car loan, but shorter.
Okay, so you've got revolving options like cards and lines of credit, and then fixed repayment options like short-term loans plus the MCA model. Different structures for different needs.
That variety makes sense. A business needs to figure out if they need ongoing flexible access or a one-time lump sum and how they prefer to repay.
Exactly. Matching the product to your cash flow and the specific need is critical.
Now, a big one for many founders, control. How does unsecured funding compare to, say, bringing on investors when it comes to keeping ownership?
This is a major plus, and Blue Barn Funding highlights it. When you take equity financing venture capital, angel investors, you're selling a piece of your company.
Right, you give up some ownership and often some control.
Exactly. You gain partners or bosses, depending on how you look at it. With unsecured debt financing, you're borrowing money. You have to pay it back with interest, but you don't give up any ownership stake.
So the business owner stays 100% in charge.
100% in charge. Full ownership. Full decision-making power. For entrepreneurs who really value their autonomy and want to grow without diluting their stake, unsecured funding is often a much better fit.
That's a powerful incentive for a lot of business owners, I imagine. Maintain your vision, your control.
Absolutely.
Okay, we've covered a lot of the positive, but we need a balanced view. Blue Barn Funding also mentions important considerations. What's the main thing businesses need to be cautious about?
The big one, generally, is the cost. Interest rates on unsecured funding can be higher than on secured loans.
Which makes sense, right? The lender is taking on more risk because there's no collateral to fall back on if things go wrong.
Precisely. That higher risk for the lender often translates into a higher interest rate for the borrower. It's the trade-off for the benefits we've discussed.
So what does that mean for the business owner considering this?
It means you absolutely have to do your homework. Scrutinize the terms. Understand the APR, any fees, the total cost of borrowing.
Don't just look at the easy access, look at the total cost.
Exactly. You need to be confident that your business's cash flow can comfortably handle the repayment schedule, including that potentially higher interest.
So really understanding your numbers and projections is crucial.
It's non-negotiable. Blue Barn Funding notes that it's often best suited for businesses with strong, predictable revenue streams who have a clear plan for how the funds will generate more revenue to cover the borrowing costs.
Okay, so it's a tool that can be incredibly powerful, especially for speed and flexibility, but you need to be sure you can manage the associated costs effectively.
That sums it up perfectly. Weigh the speed, the flexibility, the lack of collateral against a potential cost, and make sure it fits your specific situation and goals.
All right, let's try and pull this all together then. Based on the Blue Barn funding material we looked at, what are the standout benefits we've identified for unsecured funding?
Okay, number one, no collateral required. That means broader access and less personal risk. Huge.
Got it.
Number two, speed. Much faster access to capital compared to many traditional loans. Crucial for opportunities and emergencies.
Right. Speed.
3, Flexibility, fewer restrictions on how you can actually use the funds, allowing for agility.
Flexibility. Yep.
4.
Yeah.
Building business credit, responsible use helps establish a positive credit history for the business itself.
Long-term benefit there.
5. Variety of options. Cards, lines of credit, short-term loans.
Oh, right.
Choices to fit different needs.
Options.
And finally, number 6. Preserved ownership. You get funding without giving up equity or control of your company.
Okay, so those are the big 6 advantages highlighted. No collateral, speed, flexibility, builds credit, variety, keeps ownership.
That's a good summary. And while, yes, the interest rates need careful review,
The potential upside in terms of agility and opportunity is significant for the right kind of business.
exactly, it's about finding that right fit.
So for everyone listening, especially the person who shared the Blue Barn info, maybe take a moment to reflect. Given your own business, your specific needs right now, which of those benefits we just listed really resonates? What could make the biggest difference for you? And maybe, conversely, what's the aspect, perhaps the cost, perhaps the repayment structure that you'd need to examine most closely before moving forward?
Those are definitely the right questions to ask yourself. Self-awareness is key here.
And if exploring this further with Blue Barn Funding seems like a potential next step, they provided their contact info. You can call or text them at 203-200-0594.
200-0594. Got it.
Their email is email protected.
info@bluebarnfunding.com.
They're also on Twitter. Handle is @BlueBarnFunding. And, of course, their website, www.bluebarnfunding.com. Lots of info there, presumably.
www.bluebarnfunding.com. Yeah, definitely worth checking out their site or reaching out directly if this sounds like it might align with your needs.
Absolutely. Do your research, ask the tough questions, and see if unsecured funding could be the tool you need to move your business forward.